China warning it is not afraid of a trade war with the U.S. after President Trump announced plans to impose 100% tariffs on Chinese imports and new export controls on critical software. However, the president also then softened his tone over the weekend, saying everything with China will be fine.
Tensions are flaring up again after China imposed even tighter export controls on rare earth minerals. The Trump administration saying it will set price floors across a range of industries to combat market manipulation by China.
Global markets are trembling again as tensions between Washington and Beijing flare up in ways the world hasn't seen in years. The United States has announced a sweeping set of 100% tariffs on Chinese imports, targeting everything from electronics and solar panels to electric vehicles and medical devices. Framed as a retaliation for China's rare earth export limits, the move signals something far deeper. A shift toward open economic confrontation. With the global supply chain already strained and nations scrambling to pick sides, the question now is whether this marks the start of a new era of economic warfare. How far could this escalation go? And who will bear the cost when the world's two largest economies collide? Let's dig in. Markets are reeling after Donald Trump declared that if China wanted a fight, America was ready. Within hours, those words ricocheted across the world, sending Asian stock exchanges tumbling and traders scrambling for stability. The following morning, Beijing struck back. China's Ministry of Commerce released a statement warning that the country would be forced to take countermeasures to defend national interests and safeguard the stability of global supply chains. Reports soon surfaced that Chinese officials were preparing a sweeping retaliation that could shake the foundation of modern industry. According to the South China Morning Post, Beijing's plans included tightening exports of vital resources like lithium, neodymium, and praseodymium, the core ingredients used to produce semiconductors, electric vehicle batteries, and advanced electronics. These materials are the backbone of the digital age, and China dominates nearly 90% of their global processing. Analysts at the Financial Times explained that, for the first time in over a decade, Beijing was prepared to wield its control over these resources as a geopolitical weapon. Without Chinese minerals, factories that power the world's biggest brands, Tesla, Apple, Intel, Samsung, could come to a standstill. In Washington, the implications were immediately clear. The US government understood that any serious supply restrictions from China could cripple America's entire tech ecosystem. Yet Trump's inner circle revealed that retreat was not an option. He believed this was America's best opportunity to reclaim technological leadership and force a historic reset in global industry. Bloomberg Economics reported that Washington was already crafting a sweeping package of financial incentives to encourage manufacturers to relocate operations out of China and into emerging hubs like India, Vietnam, and Mexico. The goal was clear: redraw the map of global production. Lawmakers began calling it a strategy of economic encirclement, an effort to weaken Beijing's industrial reach and reassert US dominance. From China's perspective, however, this was nothing short of economic aggression, a deliberate attempt to destabilize the shy foundation of its economy. Nikkei Asia reported that think tanks linked to the Chinese government had already delivered 3 response strategies to Xi Jinping. The first was financial, gradually selling off US Treasury bonds, of which China holds more than $770 billion. The second involved restricting the export of high-tech components used in American defense and space industries. The third was strategic, boosting military activity in the South China Sea and conducting live exercises near Taiwan and Guam. To Washington, these measures looked like the blueprint for an economic blitz. A study from the Rand Corporation warned that China appeared ready for the first time to combine economic, military, and diplomatic pressure in a coordinated push to alter the global balance of power. The Pentagon began ramping up surveillance operations and deploying additional naval vessels to the Sea of Japan, signaling that the standoff had entered a dangerous new phase. Meanwhile, the Wall Street Journal revealed growing anxiety inside the US government. A leaked report from the Department of Energy admitted that America's reserves of rare earth metals could sustain the semiconductor industry for no more than 7 months if Chinese supplies were halted. A prolonged cutoff would grind US technology production to a halt. Despite its strong rhetoric, Beijing remained careful not to trigger full-scale panic. China's economy still relies heavily on exports, and its leaders knew that an uncontrolled escalation could backfire. Yet inside the Communist Party, the tone was shifting. According to Reuters, Xi Jinping convened a closed-door meeting where he reportedly declared that if others tried to choke China's economy, China would show it could choke them with technology. Those words, sources said, drew firm approval from senior officials and military leaders. In Washington, the response was swift. the administration announced a $400 billion national program aimed at securing America's technological independence. Plans were set for new semiconductor plants in Arizona and Ohio, expanded rare metal mining in Nevada, and the creation of a national lithium reserve. Still, experts from CNBC pointed out that such projects would take years to deliver results. The confrontation, meanwhile, was unfolding now. Across the Atlantic, panic began spreading through European capitals. Der Spiegel reported that leaders in Germany were holding emergency consultations as their auto industry faced potential collapse. German manufacturers depend heavily on Chinese materials to produce electric vehicles, and any supply cut could trigger a deep recession by spring. The head of the German Automobile Manufacturers Association warned that without Chinese lithium and magnesium, Europe's industrial machine would stall. Inside China, a massive economic restructuring was already underway. State media began promoting the slogan, "Made in China for China," emphasizing a pivot towards self-sufficiency and domestic innovation. According to China Daily, the government allocated 1 trillion yuan to boost national microelectronics firms and construct new facilities for refining rare metals. The message was unmistakable. China was preparing to operate in a world where cooperation with the West could no longer be relied upon. But the United States was not out of moves either. Reports from Politico revealed that Trump's administration was considering a sweeping ban on all exports to China involving dual-use technologies, tools that could serve both civilian and military purposes. That included artificial intelligence systems, quantum processors, and advanced simulation software. A special White House task force had been created to study the feasibility of a complete technological embargo, an action analysts compared to the global shock of the 1970s oil crisis. The stakes were growing higher by the day. Economic experts began warning of an emerging dual world economy, where two rival blocs, one centered around Washington, the other around Beijing, would compete for dominance. The economists cautioned that if this trade war persisted for another year, globalization in its current form could collapse entirely. Multinational corporations had already started building separate supply chains, one for the American market, another for China. The costs were enormous, efficiency was plummeting, and the world economy was splintering into factions. The pressing question now was endurance. Which nation could withstand the strain longer? China's growth had already slowed under the pressure of shrinking exports and weakening investment. Meanwhile, Beijing was working to insulate itself through alliances beyond Washington's reach. It deepened ties with Russia, Saudi Arabia, and other BRICS members, creating alternative trade routes and payment networks. RTS Global Monitor reported that more than 30 nations were already preparing to use the yuan and ruble for oil and gas transactions, effectively bypassing the US dollar. Such developments represented one of the most serious challenges to American economic supremacy in decades. Ironically, amid the escalating rhetoric and sanctions, trade between the two powers continued. Cargo ships still crossed the Pacific, contracts were still being signed, and business conferences still took place as though nothing had changed. Yet beneath the surface, a deep mistrust was spreading through both governments and corporations. Each new tariff or export control widened the divide, fueling uncertainty and suspicion. That uneasy calm carried an undertone of something familiar, a chill that echoed the atmosphere of the Cold War. The world appeared to be entering a new chapter defined by confrontation, not cooperation. Geopolitics, technology, and resources had fused into a single struggle for dominance, and neither side seemed willing to yield. Every factory, trade deal, and policy decision had become part of a much larger contest shaping the century ahead. Prime Minister Mark Carney stood before reporters on Thursday, measured and calm, as questions swirled around Canada's growing tensions with Beijing. He confirmed plans to meet with senior Chinese leaders soon, but sidestepped speculation about a potential deal that could see Ottawa lift tariffs on Chinese electric vehicles in exchange for relief on canola exports. Carney made it clear that Canada's engagement with China was resuming after years of frosty relations, but the scope of those talks, he hinted, was far broader than a trade of tariffs. Canadian officials later confirmed that Carney could meet Chinese President Xi Jinping during two upcoming summits in Asia, a meeting that would mark a new phase in what both sides hope will be a managed, if fragile, reset. At the press conference, Carney stressed that any progress would take time and that the bilateral relationship had to be viewed through a wider lens than individual industries or commodities. It's naive to narrow such a complex partnership to a single trade-off, he explained, signaling that the talks would address not only trade, but also political and security dimensions shaping the region. The tension between Ottawa and Beijing had been building for months. China's decision to impose anti-dumping duties on Canadian canola imports followed Canada's earlier move to apply 100% tariffs on Chinese electric vehicles, a symbolic show of alignment with Washington's broader effort to curb Chinese industrial expansion. China's ambassador to Canada had floated a possible compromise: remove the tariffs on vehicles, and Beijing would drop its duties on canola. But Carney avoided endorsing that proposal. He emphasized that any move by Canada would also have to account for how the United States, currently locked in its own escalating trade war with China, might respond. The situation, he implied, was far more delicate than a simple exchange of concessions. While Carney's diplomatic balancing act unfolded, another front in Canada's trade challenges was heating up in Washington. High-level negotiations were taking place between Canadian and American officials as both sides sought to ease mounting tensions over steel, aluminum, and energy. Trade Minister Dominic LeBlanc, joined by Privy Council clerk Michael Sabia and senior negotiators, spent the week in the U.S. Capitol meeting with Commerce Secretary Howard Lutnick and Trade Representative Jameson Greer. The Canadian delegation's goal was to secure sector-specific agreements that could stabilize key industries shaken by tariffs and uncertainty. LeBlanc described the conversations as productive and said both sides recognized the urgency of finding common ground. The talks were continuing against a backdrop of rising pressure at home, where several provincial leaders were demanding that Ottawa push back harder against the Trump administration's economic maneuvers. During Carney's visit to Washington the week before, Trump had instructed his top trade officials to keep negotiating with their Canadian counterparts to reach quick deals that could ease strain on both economies. LeBlanc told reporters that if progress could be achieved on steel, aluminum, and energy, the focus could then shift to broader areas of cooperation. But the trade war's effects were already taking a toll on the auto sector. Trump's decision to impose a 25% tariff on cars and light trucks built outside the United States was designed to force automakers to bring production back to American soil. Within weeks, the impact rippled across North America. Stellantis, the parent company of Chrysler, announced a massive $13 billion investment to expand its U.S. operations, creating thousands of new jobs in Illinois, Michigan, Ohio, and Indiana. Part of that expansion included moving Jeep Compass production from the Brampton assembly plant in Ontario to Illinois, a move that stunned Canadian officials who had recently offered Stellantis generous subsidies and incentives worth up to $15 billion to maintain and grow its presence in Canada. Industry Minister Melanie Joly called the decision unacceptable. Speaking in New Brunswick, she criticized the company for pulling back on commitments made under agreements with both the federal and Ontario governments. She reminded reporters that public funds had supported the retooling of Brampton's facility and vowed to hold Stellantis accountable. Carney echoed those concerns, linking the company's decision directly to U.S. trade policies. He said his government would work with Stellantis to find alternative opportunities for the affected workers and ensure the company honored its pledges. That wraps up today's story. What's your take on these growing trade tensions and their impact on Canada's future? Share your thoughts in the comments, and if you want to stay updated as this situation unfolds, make sure to subscribe and turn on notifications. Thanks for watching, and see you in